They say you need a six-figure salary to build wealth. But here's the uncomfortable truth. Most people earning high incomes are still living paycheck to paycheck. They drive fancy cars but can't handle a $1,000 emergency. They look rich, but they're not wealthy. So what if everything you've been taught about money is upside down? Because the real path to wealth isn't about earning more. It's about thinking differently, acting smarter, and building freedom brick by brick. And today, I'm going to show you exactly how to do that, even if you're starting with less. Welcome to Inner Yield, where mindset meets investing. Today, we're breaking down how to become wealthy without a high salary. And no, this isn't clickbait. It's the blueprint the wealthy won't teach you. First, let's redefine what wealth actually means. Wealth isn't just about income. Wealth is assets that generate income. While you sleep, you could be making $300,000 a year and still be broke, or earning $2,800 to $500 a month and building real wealth. The key difference? It's not what you make, it's what you keep and multiply. Wealth is freedom of time, freedom of choice, and you can begin building it from any income level. So, how do you actually do it? Here's a practical 6-step framework anyone can follow. 1. Master your mindset. Wealth doesn't begin in your bank account, it begins in your mind. Your beliefs shape your financial reality, often more than your income does. If you've been conditioned to think you'll never be rich because you don't earn much, you'll unknowingly create habits that prove yourself right. But here's the truth most people overlook. The majority of self-made millionaires didn't start with high-paying jobs or family wealth. They started with average incomes, but extraordinary thinking. They believed it was possible, and they acted accordingly. Here's the key difference. A scarcity mindset says, I can't afford it. A wealth mindset asks, how can I afford it? One shuts doors. The other opens possibilities. That shift alone can change your life. To build that mindset, you need to feed it daily. Surround yourself with books, videos, and mentors that challenge your thinking. And if you're not sure where to begin, there's one book I highly recommend, The Psychology of Money by Morgan Housel. It's not just about how money works, it's about how you work with money. It explores the emotional and psychological patterns that shape our financial decisions, often without us even realizing it. It will make you rethink everything you thought you knew about building wealth. You'll find the link to it in the description. Because here's the bottom line. Without the right mindset, every financial strategy in the world will fall apart. But with the right mindset, even the smallest income can become the foundation for lasting wealth. 2. Save like an investor. This isn't about budgeting every coffee. It's about directing your money toward assets, not liabilities. Real wealth builders don't just save, they allocate with intention. Here's the mindset shift. You're not saving to deprive yourself, you're saving to buy back your future. Ask yourself this powerful question before every major expense. Is this purchase feeding my future or stealing from it? A $500 phone upgrade might feel exciting today, but in 5 years it'll be worthless. Now imagine putting that same $500 into an ETF or dividend-yielding asset. It's not just money saved, it's money working for you, day and night. Because that's what wealthy people do differently. They don't just save for emergencies. They save to invest, to build, to buy assets that generate more income. Every dollar saved is like planting a seed. The earlier you start, the more trees you grow. Even if you start small, say, $5 a day, that's $150 a month. Invested consistently, with compound growth over time, it could turn into tens or even hundreds of thousands of dollars. And no, you don't need to be a financial genius. You just need to be consistent. Wealth doesn't require a huge salary. It requires discipline, strategy, and a vision for your future self. So next time you're tempted to spend impulsively, pause and ask, is this purchase helping me build my freedom, or is it keeping me stuck? That's how you save like an investor. That's how you take control of your money, before it takes control of you. 3. Build high-return skills. You don't need a high salary, but you do need high-value skills. Skills like sales, copywriting, digital marketing, coding, negotiation, freelancing, public speaking. These are leverage skills. They allow you to earn more on the side, or eventually leave your job. The internet has leveled the playing field. You can learn most of these for free or cheap. The ROI is enormous. Stop trading time for money. Start trading value for money. 4. Start investing early, even tiny amounts. Here's the real game changer. You don't have to earn your way to wealth. You can invest your way there. Even with a modest income, you can begin building real, lasting wealth. And no, it's not reserved for the elite or Wall Street insiders. Thanks to platforms today, you can start investing with as little as $50 a month. That's less than the cost of a weekend dinner or a few streaming subscriptions. But the potential payoff, life-changing. A great place to begin is with broad market ETFs like the S&P 500. These funds allow you to own a piece of 500 of the biggest, most successful companies in the world in a single investment. Now, we're not offering financial advice, so always do your own research. But here's a simple example. If you invest just $100 per month, starting at age 25, and earn an average return of 10% annually, which is roughly the historical return of the S&P 500. By the time you reach retirement age, you could have over $200,000. Now double that to $300 a month, and you're looking at over $600,000. That's the power of compound interest, what Albert Einstein called the eighth wonder of the world. It means your money is not just growing, it's growing on top of its own growth. But here's the key. It only works if you start early. It only works if you stay consistent. And it only works if you resist the urge to pull out during market dips. Investing is not about timing the market. It's about time in the market. So don't wait for the perfect moment or a big paycheck. Start now, even if it's small. Every dollar you invest today buys you more freedom tomorrow. More time. More peace of mind. More options. Because wealth isn't built overnight. It's built over time, brick by brick, by those who dare to start when it still seems small. 5. Create income layers outside your 9-to-5. Want true freedom? You need multiple streams of income. Here are examples: a digital product or ebook, affiliate marketing, YouTube channel, rental income, freelancing gigs, stock dividends. Don't rely on one paycheck. Start building income outside your job. Even $100 extra a month can be reinvested and scaled. Treat your 9-to-5 as your investor, not your identity. 6. Avoid the 3 wealth killers. Even if you follow all the steps we've discussed, master your mindset, invest consistently, save with purpose, there are still a few silent killers that can quietly undo all your progress. Let's break down the 3 biggest wealth killers you must avoid at all costs. First, lifestyle inflation. This is the sneaky one. You get a raise, and suddenly, you're driving a newer car, dining out more often, and upgrading everything. It feels like progress, but it's a trap. Because while your income grows, your expenses grow with it. And soon you're stuck in the same cycle, just with fancier bills. The wealthy don't inflate their lifestyle with every raise. They increase their investments, not their liabilities. Control your lifestyle inflation, and you create a powerful gap between what you earn and what you keep. Second, bad debt. We're not talking about strategic loans or low-interest mortgages. We're talking about high-interest credit card debt, payday loans, and consumer financing that keeps you trapped. Bad debt is like reverse investing. Instead of your money working for you, it's working against you, compounding in the wrong direction. Avoid it. Pay it off aggressively. And most importantly, don't let emotional spending sabotage your long-term freedom. Third, short-term thinking. This one may be the most dangerous of all. Because we live in a world of instant gratification, fast money, quick wins, and viral trends. But real wealth doesn't follow that timeline. Building true financial freedom requires patience. It means saying no to short-term temptations so you can say yes to long-term abundance. The best investors, and the wealthiest people, aren't necessarily the smartest. They're just the most consistent, disciplined, and patient. Avoid these 3 traps, and you'll accelerate your wealth-building journey more than most people ever will. Because success isn't just about what you do, it's also about what you're smart enough to avoid. Now, let's make it real. Here's a 12-month roadmap to begin building wealth. Month 1-3. Read 2 money mindset books. Track every expense, save at least 10% of your income, open an investing account. Month 4-6. Learn 1 high-value skill, start freelancing or a side hustle, invest $50, $100 a month. Month 7-9. Create a digital product or content. Increase income via skill or freelancing. Boost investments to 15 to 20%. Month 10-12. Build your emergency fund. Reinvest side income. reflect on your progress, and refine. This plan doesn't require a high salary. It requires commitment, consistency, and courage. Let's be honest. The system is designed to keep you surviving, not thriving. But if you change your mindset, if you master your money, if you build skills and take action daily, wealth is not only possible, it's inevitable. Subscribe to Inner Yield if you're done surviving and ready to thrive. Like the video if it gave you value. Drop a comment. What step will you implement starting today? And don't forget to check the links in the description, the powerful book that started it all, The Psychology of Money by Morgan Housel. See you in the next video, where we help you master both mindset and money.